Hey everybody, I just wanted to talk a little bit about sector rotations. And for those of you who ended up buying any of the dips today, whether it be in Chinese equities, NEO, or these high growth stocks, or these high momentum or retail favorite stocks, you did pretty well today. NEO, for example, had a 7% gain, I think. And that's, yeah, if you ended up buying the dip anytime this week, that's good. And so for me, on Tuesday, I ended up buying the dip because I had figured that um, after Monday we had a green day, and I figured that people would be taking profits because there was no real change in the sentiment overall on why we should lessen our political risk when it comes to Chinese equities. I mean, for me personally, I don't ever worry. You know, I don't ever stress. The reason why is because I understand what's going on with China and the U.S. and the politics behind it. I look at the data, I look at the metrics, I look at the probabilities of certain outcomes, right? So if we have bull or bear cases, or if we have scenarios that could happen, maybe we can think of like 20 probable scenarios of the relationship outcomes between the U.S. and China. So I do these kind of things, and I make percentages of the probability of these outcomes to occur. And the whole point of the market is to be able to manipulate you and to um, how can large money, how can institutions and hedge funds take money away from retail investors, right? That's and others and other entities, right? That's the main point of a lot of these institutions and hedge funds, right? How can they shake the weak hands out is what we'd say. And so, I always, coming into the market, I always think about a few things, right? Like, what, what is the narrative? What is the rhetoric being said? What is the general consensus? What are things that, you know, market makers want us to think as retail investors, and what are their goals? But anyway, so it's always good to think critically, right? Whether in anything in life you do or any decision you make, you always want to do it with a calm, level head. But when you look at the stock market, the colors are red and black, the red and green, and the reason why is because they're supposed to they're supposed to invoke some sort of feeling with you, right? Green is fear, no, green is greed, and red is fear. So yeah, they actually do use colors to manipulate people. So in my opinion, the stock market shouldn't just be viewed as just numbers and data. It's a very big psychological game as well. And if you can properly put together fundamentals, technicals, psychology, market consensus, all these other things you factor into this equation, odds are you're gonna make the right answer more often than people who don't put in the work. And in my opinion, it's all about putting in the work. But anyway, I just want to go over something interesting to me, and that's sector rotations. And I won't go too in depth with this because it really doesn't have to. You really don't have to go too in depth with a concept like sector rotation. So, what is sector rotation? Well, I don't have the definition on hand, but if I were to come up and say something, I would say the easiest way for me to explain it to a fellow retail investor is that it's the priority of the markets and where they want to allocate their money into, right? So we have here, let's see. So we have here different types of. I know there are different like phases of cycles, but I don't really know too much about that aspect because they're never really consistent. It's not like they certain industries do tend to move in certain ways throughout the year in certain manners when conditions are met, when the performance of the market is moving in a certain way, then yeah, certain conditions will be met, and then certain sectors will be prioritized. But I'm not going to go into depth with that because that's a lot of speculation as well. Well, not speculation, but it's a lot of guesstimation, So, but anyway, so we have different types of sectors here: financial, real estate, consumer, infotech, industrials, materials, energies, utilities, and there's other sorts of sectors that are not listed as well, or there's other sort of industries or sectors or groups of companies that would benefit off certain rotations from money and capital and investor focusing, investor priority. So what is my point of this? Well, I don't think I explained it properly, but it's important to know that one sector, for example, like the electric vehicle sector, cannot pop off forever, right? Once you inflate a bubble, uh, it has to eventually pop. And when that bubble pops, it cools down, right? But that doesn't mean the bubble can't be reinflated. You can just put more air into that bubble. So let's think about the electric vehicle stock and the meme stocks and these tech stocks, right? While most stocks in general did have a big rise, we saw that the tech stocks in general, whether it be small cap, medium cap, or large caps, had really big rise in their value throughout the 2020. And even in Chinese equities, they had huge run-ups, right? So that's in a sense a bubble. And then these bubbles pop, and as they pop, the money flows out and goes into different sectors, right? Like it was going heavily into more value stocks. And in my opinion, the best way to view this is that if you ended up liking these companies before the bubble popped, well, that it just means that you're going to be a bag holder, or it means that you're going to be holding these stocks for a little bit longer if you didn't exit or your entry wasn't the best. But there's nothing really wrong with that if you believe fundamentally in the companies, because that means that if you did buy a company and it doesn't, you ended up getting stuck at a higher share price than the current trading value. Odds are if the company is doing well and there's a lot of merit to it, it's gonna recover. So is that really a bad thing? No, because it just means you can either hold on to it, take some profits, or you can take it a loss and move on to something else if you see a better opportunity elsewhere. But the important thing to me when it comes to sector rotation is that you have to remember that the the goals of other people, whether it be retail investors, market makers, hedge funds, institutions, it's to take money from others and to find better opportunities and for themselves. So oftentimes, for example, when we had when COVID-19 was a bigger issue in the media than it is now, um, institutions capitalized on that. The media did as well, and they would pump as much bad news as possible, and this negatively impacted the travel industry, hospitality, and all these other stocks and companies that were negatively associated with the COVID-19 or negatively impacted somehow. Those stocks went down tremendously, right? Like travel went down tremendously, but tech went up, and tech went up as well. Energy went up. Um, you know, Healthcare went up. These kind of stocks went up while travel and hospitality went down. So, in my opinion, the best time to buy, hospitality and travel and all these kind of stocks that were affected by the negative sentiment around the COVID-19 is when the stock's being beaten down. There was some really bad news like, airlines are going to go bankrupt, hotels are going to go bankrupt, a lot of companies are shutting down, and that these companies will never will live on a lifeline from the government forever. And whether that may be true or not, that's up for debate. But the point is what I did is that when I saw these airlines get beaten down, that's when I started putting in all my money. I put all my money into these airlines that were beaten down, and I bought put options on Marriott, for example, and then I took profit. And once I saw the overall sentiment from the media and investors and Wall Street and all these other entities that I like to look at, turn around, is when you start taking profit from the airlines and hospitality and travel. You want to take your money out when you start seeing people, you start feeling out a top. And that's kind of what happened. And then the growth in these stocks slowed down after they hit the bottom. And so financials, and small cap, medium cap, large cap, Chinese equities, they started to get beaten down, right? So you put your money in that, and that's what I was doing. So, in my opinion, it's never good to chase money. It's always good to find opportunities. And so, when you see a stock beaten down, or you see a company beaten down, especially if these companies are beaten down because of overall market consensus in these particular industries, it's a good time to, in my opinion, to place money into these industries because they're not going anywhere. The companies are still doing great, but it's just that, for whatever reason, there's a lot of bad feelings around these particular industries and sectors. So you know that these sentiments change over time, right? Sector rotation, and that's the best time to put in your money when they're beaten down and the value stays the same, but the pricing becomes a little bit too favorable to pass up. So I do believe heavily in investing in sector rotations because as long as you can find the right companies in each sector rotation, you're always going to find the winners, right? And because like, okay, here's an example with Chinese equities and Neo, but I'm gonna speak more about Chinese equities. Um, I didn't buy Alibaba, for example, when it was already up in the high 200s and over 300. I bought Alibaba when it was in the hundreds, and the reason why is because there was a lot of negative views regarding the China and U.S. relationships prior to Joe Biden's presidency. So, in my opinion, those are the best times to buy. I was buying stocks like Alibaba, uh, Zepp Health, Neo, Meituan, um, JD, and the few other stocks like Luckin Coffee. Yeah, I bought Luckin Coffee. I was buying Luckin Coffee after around $3 to $4 because there was a lot of bad news surrounding the company itself because of the fraudulent activities. But those are the best times to buy the companies, not when they're already having these huge run-ups. You're just chasing stocks. And so, in my opinion, yeah, it's good. Like, for example, when the Chinese equities when the Chinese stock markets had a crash, that's when I ended up buying. It's the best time to buy then because it's all these companies are still really great companies. Nothing has changed. I mean, yeah, a little bit has changed, right? But the politics revolving on the government or the Chinese financial system, you have to weigh your probabilities, right? I could go more into depth with this, but I won't. My main point is about sector rotations. And, when these companies are doing really, really well and they're poised, and you're in an economy that's poised to surpass the US, it's a good bet to bet on a company that's really doing well and it's only going down because of what market makers and the media wants to project onto the people, ideas that they want to project onto the people. And it's good to look at these sector rotations and follow what happens because, again, like, airlines were beaten down and everybody was saying that the company would go bad, that they would go bankrupt. But look, they're doing fine. They're still all here. All of them are still here. So if you had put money on the bottom and you ignored the bad news, you would have made tons of money. Same thing with Chinese equities, I believe. Like, if you buy the bottom, if you try to time the bottom or you average in during all the bad news, well, you know what? If you think that in 2028 or 2029 China is going to be leading economically, odds are is that these stocks won't be delisted. And it's the same thing with, like, with Neo, right? Neo has been performing fairly well. The company keeps making improvements. So will it matter what the bad politics and news are in a year or two from now? Probably not. So anytime you have money flowing out of a sector, the sector gets beaten up by the media and Wall Street and all these other entities, and that's when you put in money. And then when everyone's starting to pump the sector industry, take some profits, man, and put it into a different industry. And this has been working for me really well because at the end of the day, money is always going to flow in and out, and volatility is a must, right? Everyone loves volatility. So I didn't explain it right at all. I kind of blabbered on. Um, it's been a crazy day with how the stock market has been, but yeah, just be mindful of sector rotations and do your research because it's definitely a great way to invest, in my opinion.